Good. I mean, my own personal funds are affecting the same thing.
Right.
If
So,
there's anything you can take away from a meeting like this is the stock market is not the economy,
Yeah.
No.
right? So a lot of people get confused by
Right.
that. So spread that word whenever you can.
true. I mentioned this withdrawal we had last year too. I thought people in the town should be aware that the endowment's really starting to contribute to covering cemetery fund expenses. Um, and despite that $20,654 withdrawal, the fund on the year was still up to 304,000 as of November 30th, up 4% over last year, which I fully expected it was going to be down given that big withdrawal. So I think that's great too.
That's what you want.
So any questions or comments about the report?
No, it seems that you are taking good care of our endowment.
We all are trying.
Yeah.
And I sent the copy to you guys at the time.
Yep, thank you.
It's really an indication of the group as a whole, but it's also the firm. The firm is very good.
Right,
So that's an important
the
component of
firm
this.
being T.
Your
Rowe
price.
Right.
There's a
Yes.
lot of choices out there. This one's
Good.
good.
So if you look at the next page, I just provide information for 2 pages on the balanced fund. So this is all about the balanced fund, since that's where most of our investments are. And the first page is just background on the strategy and risks. That's this page, just, you don't need to look at it now, but you'll at least have that. I think the risks are very appropriate, and, the way they dynamically manage the asset allocation is great because they've got a lot more information than we as a committee had, and we were trying to do that ourselves, and we did fine, but it wasn't very sustainable. And this thing is on autopilot, more or less. Now, the one adjustment we can make is we could say, gee, we don't want to have this much balance fund. Let's have more short-term bond fund, more money market fund. And we'll talk about that at the end, but that's the one thing, we could do the way we're set up now to cut back on the risk. So
Yeah.
let's not get into that now. We'll get into it in a minute.
So I think just the takeaway is that this approach, regardless of investment people being at the table, this approach could be managed by just folks who came in, who manage their own money at home. And if the committee looked like that at some point, this within reason, this should actually do it.
Yeah, that was
Scott's
the whole idea.
the whole idea behind
Yeah.
it. So if Murray was here and Michael decided to come in and other folks, it should be okay.
Yeah,
Should be okay.
I'm probably not gonna be here forever.
Really?
Um,
If it works, don't fix it.
Yeah.
Right.
right, we can always make modest adjustments. So if you turn to the next page, this Morningstar rating page, it's this one. You can see some of the return numbers here. So, as we mentioned in the report, the return, this says 1210, 1586, S&P was 7.9. Which is good. And and the thing I wanted to mention here is it's rated 4 stars by Morningstar, which is one of their top ratings. It's very hard to be 5 stars. You have to have super low expenses as well as great performance, but this is a very good fund. And if you look at the next page, it would show average annual returns, these bar charts. The dark bar is the balance fund, and the light bar is Lipper's Balanced Fund Index. So that's all the other balanced funds that exist, basically. And you can see this fund is has consistently beaten the index, which is great. So we not only have a fund that, has the right risk reward parameters for what we think is appropriate, but it's doing well too.
So the other point there is that, so this is at 60 basis points, right? So right here.
Mm-hmm.
So, you can get a similar product, get 10 or 15, or depending on what's in it, or more
From Vanguard.
or you can do more. But people always say, well, expense this, expense that. this is a reasonable expense with
Right.
great overall risk adjusted return. So that's what you're looking for.
Yeah, and what you are getting with T. Rowe Price, as Steve alluded to, is a really top research group. So these guys are really good, and they're especially good on technology, which is partly why we picked them, 10 years ago or whenever it was.
Yeah.
All right, on the next, okay, so we looked at the bar chart. On the next page, there's just some scribbling by me to look at the adjusted asset allocation. And one of the things I think that's interesting here is you see they have pretty good foreign stock exposure, 22%. And the overall mix is 65 equities, 35 fixed income, and some odds and ends. One thing I am somewhat concerned about is they do have a big exposure to information technology, which you can see below there. It's almost 24% of the fund, and they own the funds, the companies that, have been leading this. And if you look on the next page, their top 10 holdings, you can see, they do have this real asset exposure, which is good. That helps protect against inflation. But then you've got, the usual suspects, NVIDIA, Microsoft, Apple, Amazon, Alphabet. It's my hope that they are paring these back now. I don't know that they're doing that, but they've had such a run and they're starting to underperform the last 3 weeks. And, I know they're sensitive to that and I hope they're, cutting back some. And then above that, you can see their geographical exposure. So, just background information.
I mean, time will tell on that, right?
Only
Time will tell.
Yep.
We'll meet again in the summer and we'll see what happened. That's what we paying the 60 basis points for.
Yeah, 1 or 2 quarters doesn't define a trend.
Right.
Yeah.
Right. We just don't want them to give too much of their outperformance back.
Yeah,
which
which
is-
they might a little bit. Who knows? I mean,
Well, I
it
think
can
that
happen.
gives some of it back, sure. All right, so any questions on the fund or anything else at this point?
I'm good, thank you.
You good?
No, I'm good. I'm good.
Absolutely.
Looks so
It
good.
smells like summer all of a sudden over here. Steve. Thank
You're
you.
from my mother-in-law. I should have brought more down. I
Yeah.
apologize. I thought about grabbing them, but I was already late.
So I think the next topic is funds current asset allocation. Are we comfortable with where we are now? Does anyone think we should make some changes? And if so, what?
So currently, Rodney, we're basically 60-40 split, right? Or
We're 55% stocks,
stocks, yep,
45%.
cash, fixed income cash, right?
Yes, exactly.
That's
What's the cash getting us these days? What's that position traded money market at? Anybody? That was good at one time. I don't know. Is it still in that?
I'm sorry, what?
No,
did you
rates-
say?
Is rates are down? What is that then? Wasn't it
Probably-
pretty high the last time we looked at it, right?
The current yield on the US Treasury fund is 3.8.
Huh?
It's not bad.
No.
And it's on the short-term bond, it's 5.
Okay.
outpace inflation, so that's fun.
I mean, one thing I could see somebody saying is, wow, we've done so well on the equities in this fund over several years now. Maybe we should have 60%, or not 60, instead of 85% balance, 80, and add to one of our fixed income funds. I mean, that's something we could think about.
What's it look like for this year for expenses? Any idea or any?
Yeah, I don't have it right here, but there's $9,500 extra to paint the fence at the Old West Church Cemetery. If you take that away, our budget is several $100s less than it was the year before. That fence is the one big thing we've got to get done.
Yeah, and of course, the way we've been handling distributions out of the fund is for Kari to calculate that number based on 4%, which we decided was a reasonable expense spending rule. And that you know, is gonna come up to something like, what, 12,000?
Mhm.
Yeah.
In round
Yeah.
numbers. So you'll have that and,
Yeah, and everything else is what we're
It's
asking
a
from the tax.
8.8% increase is what you're proposing,
Okay.
including the reserve fund for fencing.
Yeah, and that is a caveat that if we get volunteers to paint that fence, that money will roll over into the next budget and it'll all even out.
oh, that's.
So you got that last year, right? Got the kids, the football team,
Yeah,
Yep,
right?
this fence is bigger, it's more complicated. And our hope is we're gonna get the Norwich University Corps cadets up here to do it.
Cool.
wow.
Very nice.
And if we can, we will. If we get other volunteers, we will, but
Do you have a connection with them?
yes, through Laura Daly. She knows people down there. She's been talking with them.
Oh, great, because I mean, they do these community projects.
That's it. They've all got to have a certain number of community hours. So
Yeah.
they're anxious to do it. My question is, how many of them know which end of a paintbrush to hold?
It's not that hard.
And
Well,
no one sees the backside of that fence anyways, other than
Yeah.
like me skiing by.
That's
It's
it.
COVID.
now, which fence is it? Is it
Old
Robinson?
Miss Church,
Yeah.
which is now 2 years old and hasn't been painted.
Right, but that means it's just ready to paint.
Yeah.
It's ready to paint.
Yeah.
But the problem is, we get somebody to do the priming. We then are obliged to do a finish coat because you can't leave it over the winter with primer on it.
Should
It
have just
really
made a
should have
granite
two
post,
coats.
Michael. We talked about that. Granite post would have been.
You guys are good
got
at
nothing else to
getting
do
me
now, man.
volunteers. I'm sure you'll do it.
Yeah,
then.
post it.
And I
Yeah.
think if you don't
Yeah,
have
I know,
enough
I know.
Norwich people, you can put out a feeler again to townspeople. I think
Yep.
everybody would.
You know, and it depends. I mean, Saturday I can get 11 people, Tuesday I can get 18 people, and do they come when I need them? It's not easy.
Mhm.
So your
Depends
question
on the
is,
weather, right?
Pardon?
And whether,
Oh,
so get back to your question. So
Yes.
you want to take a little money off the table, perhaps, maybe? Is that kind of what you're leaning towards? We should have a little conversation about that, or
I'm just posing it as a theoretical thing we could do.
okay.
And I think at this point, I'm not suggesting we do it, but if one of you guys thought we should do it, we should talk more about it. What do you think?
I've always been of the opinion when it comes to asset allocation, right? You don't like to shift, you wanna. You got the 10% at the bottom and the 10% at the top, and you wanna capture that 80% in the middle. And it feels like at our asset allocation that we're capturing that 80% in the middle to shift something to avoid. Maybe a quick downturn and miss out on the upturn, I think where we sit is pretty conservative.
I agree. I mean, if you wanted to take profits, just you put some into cash. Well, in case this costs more than we think, that's the potential. It's something that I agree with your analysis.
Yeah, I mean, you capture that 80 in the middle.
Yeah.
Yeah, and so I think what we ought to do is monitor this, see how it goes.
Hmm.
And if it looks like the AI boom is turning into the .com bust, we should think about it.
Yeah. Let's have a number in mind is, make that call and Kari make the call and just move whatever amount we think is.
Yeah,
Yeah.
we could have a quick email
Yeah.
Yep.
or a quick call over the phone and
Because they'll have to publish their quarterlies at the end of fourth quarter, so we'll see how that technology allocation has.
Yeah, that's-
If that shifted or not, and if it's still sitting at 23%, then we can revisit. Based on how we think. If we think it's feeling bubbly, right? So,
yeah, I'll look that up and send it around to
Yeah.
you guys.
If this hadn't is done as well as the position that we're in right now, I would be an advocate for actually taking some off right now, just to be ahead of it, but it's really working out well the way it is, so I don't
Yeah.
want to upset the apple cart, for lack of a better term.
Yeah, and it was a year ago that we made this change to the balanced fund and, for all the reasons that we talked about, and I personally think it's worked out just great. I wasn't sure how it was gonna work out, but
yeah, in a balanced fund, the risk return profile, if we're 200 basis points below the S&P 500, that balanced fund is really performing well.
super.
It's
Right,
got that
so-
foreign exposure, so
Yeah.
it's juice, it's juiced a little bit, just like, I haven't looked at it in detail, but
Yeah, foreign exposure helped a lot this year. And so obviously did all the technology. Those two things really drove their performance. you know.
What is the real asset part of it, do you know? Did you take a look? at
Yeah,
it?
that's,
So it's,
it's a fund that they put together that includes stuff like inflation protected bonds,
okay,
real
Alright.
estate, some commodities. It's a mix of stuff that they think, that they call real assets,
yeah,
which they think are, you know, help to protect against inflation and are a good diversifier from normal stocks, if you will,
Yeah.
and bonds. So,
yeah, so they're kind of doing it, a little bit.
yeah.
On their own, which is what
Yeah.
we're paying them to do, alright.
And they have very smart asset allocation people,
Yep.
which I've sort of tuned into some of their presentations and, you know, some presentations leave you, "Oh, I don't know." But these guys, it always seems like, "Oh, that makes sense."
So in
No,
terms
not
of,
mine.
in terms of monitoring,
Yeah.
are you keeping an eye on things on
Oh,
a
yeah.
pretty regular basis? You'll see if there's a downturn.
Yeah, I'm in my office looking at this stuff every day, not
Every day.
necessarily T. Rowe Price.
Yeah, okay.
Yeah, I'm very, yeah, involved in this because of some of the other stuff I do, and I have a, you know, a personal or a family business of managing family money, which, you know, requires that too.
Yeah, okay.
Yeah. Um,
But we shouldn't get to that point. Like, that's kind of the point of this, right? Like, at some point, if there's a different cast of characters here, again, for lack of a better term, you don't want to get into this trading conversation which we're
Yeah.
having over here, because I would urge against it.
Yeah.
I mean,
and I wouldn't call it trading. I would call it just a once a year look at our asset allocation where
yes,
you can make an adjustment, and I wouldn't think of it as trading at all. It's simply, okay, the return's been great, the risk seems a little high, let's just make a slight modification to our asset allocation.
agreed. I just trying to like curb against down the road if there's a
Right.
different group of people and there's other people that have been sitting here for a while. I can remember in the back of their head, oh, these guys really didn't
Move.
move.
Yeah.
Right.
I don't
And
think
one-
Kari and I are gonna jump into moving money around.
Yeah.
But there'll be different people here.
Yeah,
yeah.
That's my point.
Right.
You're like, I think of it as the regulatory,
bridge.
the bridge,
Yeah.
yes. So,
I mean, we still have to get elected, right? So.
Yeah.
There's right. I mean, seriously, they're giving it overthrow. We can.
I was hoping to be overthrown.
Yeah, well, I turn-
We can get elected now.
I'm up for election this year. I don't know if any of you are going to annual meeting, you probably all are,
Yeah.
but someone needs to nominate me if you want me to keep doing
Yes,
it.
we
Yeah.
do. Yes, we do.
Okay,
All right.
does anybody have anything else on any of this? Otherwise, I'm gonna give you a little slight bit of history. Anything else?
No, don't make-
Yeah.
I'm remarkable. People die and we make money when people die. And I say,
Well, they get ready to.
we $17,850 that we got by selling plots.
Great.
This fiscal year.
Yeah, people are still buying cemetery plots.
Well, the green burial aspect is definitely in your favor. Someone came in today and said she bought a 4-person plot a number of years ago. It was $600 for the 4-person plot, so that probably tells you when it was. But
Right.
she was delighted to find that when she passed away, she could do a green burial next to her husband who's already there. She didn't. That wasn't the case back then. So I think that's a big draw for a lot of people.
Yeah,
Yeah, we have a plot and that's what we're planning to do too,
Yeah, our section confirmed it. Any plot you already have, you can have a green burial.
which is great.
It's wonderful.
Yeah. All right, so you go back to 2011, which is when Donna Fitch convinced me to become a trustee. And I think who else was on, I think George Morris.
Really?
Yeah,
And you had the gentleman who lived on the top of the hill, on top of Long Meadow, because that's when I came on. Bill, right? He
Bill
left.
Russell?
Bill Russell. I came in and replaced Bill.
okay, but
Yeah.
he wasn't here in 2011.
He wasn't in there in 2011.
Well, are
Yeah.
the trustees listed in there?
Yeah.
No, there's no trustee report. Back in 2011, there was no report. So all we had was a listing of cemetery assets.
Yeah.
And so what we had back then were bank CDs. And at the Northfield Savings Bank primarily, we had some shares of Toronto Dominion Bank
Mhm.
and a few other odds and ends. And so Donna calls me up and says, "Hey, Rod, I'm looking at this list of cemetery investments. could you come down and talk to me about this?
And here we are.
Yeah, and then she said, maybe would you like to be a trustee? Yeah, so that's when I joined. So the total was $98,000.
Hmm.
So we've gone from 98,000 in bank CDs. And as we know, bank CD rates went down from that point on almost. And maybe 3 years later, a couple years later, I talked to Don about the fact that the cemetery fund really is like an endowment. And we should think about investing like an endowment instead of like a bank or just a short-term investment. So I got together with Janet Ansell. We had to get the law changed
That's right.
in order
Oh,
to make the kind of investments we have now. So we talked to our town lawyers, we talked to the Vermont League of Cities and Towns. Janet was on board with this. I went down and testified at the Government Operations Committee at the legislature. And we worked with the Legislative Council to develop a new cemetery law that provided a broader range of investments, including equity mutual funds and other 1940 Registered Act funds. And that law got passed. And so that allowed us to make this change to dealer price and do everything we're doing.
and has burial plot purchase proceeds always gone into the endowment? Has that been the arrangement?
Yes, and maybe I should have mentioned that in the report. I wasn't aware of the magnitude. In the future, we could mention that, because that's another reason why the balance is higher than it was.
Yeah.
Sure.
For sure, that really helps a lot. I mean, it's the opposite of taking money out. So, so that's my little history.
Thanks.
You're welcome.
Little stroll.
All right, I don't have anything else. Does anyone have anything else? I agree with Steve. We should meet maybe in mid-year unless we have some reason to have a quick call beforehand.
Yeah, no, we should get something, mid next year, but if we want to take a look at how at the fourth quarter T row price, just on a phone call.
Oh, I'm gonna send the.
You send it in the quarter, yeah, then,
We can decide if we need to have it.
yeah, have a meeting then, but.
And if there are changes everyone is fine with, maybe we don't need to have a call, but we can always do it. All right.
Sounds good.
So I'll write up a few minutes and you can do that in future too.
All right, I'll do that. Starting, but after this meeting, I'm good to go.
Sounds good. All right, Michael, did you have something?
I got a other administrative question.
Okay, I'm gonna stop the
Thing
recording.
I was gonna ask Kari is, did we want to pick their brains about investing anything from any of the reserve funds? Or not yet?
What's the scoop there?
The
Oh,
fund has a number of reserve funds. Some things cycle through fairly quickly. Some things sit for, like, we have a reserve fund for this building and for the town hall and for things that eventually will need a new roof, and we have money sitting in there to
Right.
do that. Right now, it's just sitting in
Or
a
a
account.
community bank checking account.
Yeah.
Generating 1%.
What magnitude are we talking about?
Well, I mean, that's the thing. A year ago, we were down to our last $100,000 until we got the FEMA reimbursement. So
Yeah.
Mhm.
our total fund balance is, well, the general fund is like 400, and then probably a couple 100,000 in other, miscellaneous funds.
This is sitting in the checking account.
But yeah, but there's a cycle to this work, and
Mhm.
we need a pretty hefty buffer. I haven't really analyzed it because it hasn't been normal. What
Right.
I've experienced is not normal conditions so far.
But one of the things you could do is keep that buffer you think you need in the bank, and then you could take the rest of it and invest it in Vanguard's money market fund and in their short-term bond fund, which have very low expense ratios, and you could earn 4 or 5%.
Okay.
And it's totally liquid. You can take it out in a day if you
Okay.
need it.
Okay.
You can write checks on it. You can do a transfer from Vanguard to your bank if you have a big thing you
Yes.
need, so it's totally liquid and And I would argue it's safer than the bank.
I would argue that too, and you should definitely be doing that. Just gotta figure out the
What-
amount.
what
Yeah,
the
what
amount
the
is,
amount is, and then it's easy. It's just like you're basically dealing with a bank.
Yeah, yeah.
Alright.
Getting somebody-
You know, from dealing with T. Rowe Price, it's pretty much the same.
Yeah, yeah,
Setup with Vanguard.
it's been pretty smooth.
And then I don't know how the bylaws of the town work for like investment